Crypto Caesar Capital. Hope you're well. It's the 28th of December 2024. In my last video, I said this was going to be the last video of the year. Clearly, I lied. This is going to be the last video of the year, but this video is going to be about seasonality. And I think seasonality is important with Bitcoin, especially now that we're going into financial quarter one, and you'll see why in a moment. But before we do that, quick shameless plug for the group. The premium membership of the group is $499 a year. We're doing a special Santa package on that at the moment for $365 for 1 year. That's basically $1 a day. And for that, you get 12-month VIP membership. You get access to the altcoin picks, full education package, full Discord package, 24/7 support, live Zooms, portfolio management assistance, and daily market updates. So if you want to join the group, you can take advantage of this offer, $365, but it's got to be during December. So only a few days left on that offer. Reach out to me on Twitter, or indeed you can email us via the website. Right, let's crack on with the video. So seasonality is really, really important, and you can have a look at the seasonality of Bitcoin if you go to coinglass.com, and it will show you the seasonality through financial quarters of Bitcoin. And you can see here the average returns for each financial quarter since 2013 all the way through to current. So the average return for quarter one is 56%. The average return for quarter two is 26%. The average return for quarter three is only 6%, with a medium of almost minus 1%. And the average quarterly returns for quarter four are 85%. So the strongest quarter is always quarter four. And the second strongest quarter is quarter one. So quarters 1 and 4 are the strongest. Quarter two coming up behind that, then quarter three is the worst. And that's really quite interesting when we look at how Bitcoin reacts over time. And what I've done is I've put this together on a weekly chart, taking into account the average returns for each quarter. Now, this isn't some sort of prediction or prophecy. This is just a sort of a data-driven approach and looking at potentially where Bitcoin might go price-wise during this bull cycle. Now, in my last video, you'll know that we looked at a lower time frame. We were looking at the ranges of Bitcoin. And my view is that I think that Bitcoin is going to remain in either one of these two ranges until it starts moving upward again. And the bottom of this range at the moment is 92K. And the bottom of the range below the range low is 86K. There is a possibility if we break down through this 86K range that we could visit 73. But I just think that that's unlikely at the moment, and I would probably give that a 20% chance of happening. So the chances are, I would say, is that we're probably going to go to 86K. You never know, we might hold the 92K range, it's possible, but there is a strong possibility, in my view, that we could go to 86K. So based on that, and the seasonality of Bitcoin, if we were to drop down to 86K or so, and then in quarter one, which is a very good quarter, remember the average return for quarter one is 56.47%. So if we were to drop down to the 86K range or so, then if we follow the seasonality, as it were, we would then rise during Q1, possibly a little bit into Q2, up 56%. That would take us by, sort of end of March, beginning of April kind of time. So end of Q1, beginning of Q2, up to about 138K. Then there would be this sort of correction through quarter two and quarter three, because quarter three is just the worst. So Bitcoin then draws down a little bit. Maybe there's a drawdown of sort of 23%, 26% or so, which is standard and quite normal and seems to be the kind of standard correction at the moment. Now institutions are involved, and then we chop around through quarter two and quarter three, and then we make the final move up into quarter four. And of course, the average return for quarter four is 85%. So if we were then to move 85% from this low here, let's say, for example, we dropped down to about 110K, then we moved up 85%, that would in fact take us to around about 200K and change. And that kind of seems reasonable, to be fair, when looking at the seasonality of Bitcoin, the sort of trend of Bitcoin through the financial quarters. It kind of seems, I don't know, reasonable, doesn't it, that Bitcoin would increase by 56% during quarter one, drop down in quarter two and quarter three and consolidate, then one final leg to Valhalla of 85%, which takes Bitcoin up to about the 200K mark. So that's a video for today. Very short video, but it's based on seasonality, and seasonality is a pretty interesting thing, and Bitcoin tends to work in these seasons. And so I think it's really quite worth thinking about this as a possibility. But as I say, this isn't some sort of prophecy. This is just simply me looking at the data, looking at the average returns for each quarter and working out how that might play out on a chart. So coming up from around about the 86K mark, grinding through quarter one up to around about the 137, 140K mark, then a nice consolidating correction through quarter two and quarter three, and then the final leg from the low in quarter three up in quarter four for the final leg through to end the 4-year cycle for Bitcoin, 85%, which takes us around about the 200K mark. But that's where we are. That's what the data suggests to me. This is not a prediction or anything like that, but it's just, as I say, a data-driven approach, which I thought you might be interested in knowing. Anyway, that's it now, and I promise this is going to be the final video for 2024. So thank you very much for listening. Thank you very much for being a supporter of this YouTube channel, and thank you very much for the likes and follows and comments you give me, which are all very kind, and I appreciate that, and I wish your family well for the rest of 2024 and going into the new year of 2025. Thank you very much for listening. Take care. Bye-bye.